We are going to go to Dom now. Dom Chu, you do have those results for First Republic. What are they?
Okay, so Morgan, John, first of all, let me highlight the fact that the stock is down about 10% right now on roughly 4 million shares of after-hours volume. The earnings and revenues actually came in better than expectations. Earnings per share coming in at $1.23. Expectations were for 85 cents per share. Revenues coming in at $1.21 billion. The expectation was a hair below $1.15 billion. But it was the deposit numbers, as we spoke about this past hour, that are getting a lot of the attention right now. Overall deposits at the end of this last quarter, as of March 31st, were $104 billion. That represents a almost 41% decline in deposits over the $176 billion that we saw at the end of December of last year. That $104 billion was also below the analyst estimates, calling for roughly $145 billion as of this past quarter end. It's also important to note that $104 billion they report factors in the 30-some billion dollars that was put in by the consortium of large U.S. banks to help shore up the deposit base at First Republic. We've also got some other headlines coming through with regard to future policies. We will see job cuts, unfortunately, at First Republic Bank, who say that they will cut, excuse me, in this current quarter between 20 to 25% of the workforce at First Republic, again, to try to control costs there. Also, some headlines coming out with regard to a reduction in the amount of executive compensation at senior manager levels for the firm, as well as a reduction in office space to right-size the bank for those operations. So, again, an earnings and revenue beat, deposits coming in worse than what the estimates were for, amid signs that they will then cut 20 to 25% of their workforce and look to rein in executive compensation as well as reduce office space usage. Those are the current headlines right now. The shares are down roughly 7 to 8%, so off the aftermarket lows. We'll continue to go through here and see if there's any more color with regard to other aspects of the business. But for right now, that's what's John and Morgan driving the action to the downside right now. I would also point out that this is less volatile than some options traders were expecting. So we'll continue to monitor this. We'll bring you more as we know more, guys.
All right. Dom Chu, thank you. And, of course, shares of First Republic are now down about 5, almost 6% in the after-hours trade.
But it's moving a lot. So as soon as you say that, you get a different percentage.
I know.
It's something.
Warren, I want to get your response, especially $104 billion in deposits, down about 40, almost 41%. And that number includes the $30 billion that we saw larger banks inject during the quarter as well.
Yeah, I mean, I think it's part of the larger trend of kind of deposit flight that we're going to see. I mean, you see it in the money market fund numbers that you track, or reverse repo at the Fed. There are high interest rates out there, and banks are going to have to compete a little bit. And so you're seeing kind of I wouldn't call it a bank run, but maybe a bank jog or bank walk here. So, this is kind of the ongoing slow motion car wreck that we've been seeing in the banking sector.